Hey, so what's up? So today I got some real good insider info for you. Some secret information that you can use right now and prepare in case of a market crash. So welcome back to my channel, guys. If this is your first time here, my name is Joseph Fountain, and on this channel I talk about money. I talk about money, investments, finances, things like that, in a way that anyone can understand it, just to make it simple. So click subscribe, like the video, and if it's helpful to you, share it. So it's safe to say that our economy has, pretty much been doing well for like the last 9 years. We've seen real estate take a turn and things are working out well in real estate now. The stock market has been going up. We've seen sales and different things constantly increase. But here's the thing you got to understand. Now, if you were to look at the history of the stock market, it has pretty much went up since the beginning of the market. However, every so often we've had corrections, we've had, recessions and things of that nature where, the market has just pretty much pulled back for, a certain amount of time. Now, during that time, it is actually some of the best opportunities you will ever find in the market is when things have made a U-turn and are going down for a considerable amount of time. In fact, for me personally, my best wins in the stock market started back when we had the economic downturn, the recession back in from 2006, 2007 through 2009. So now this was happening back when I started to invest. I started investing about 12 years ago. And when I started investing, the market was, showing some crazy signals and crazy signs. But here's what I did. I started to learn about some of the most successful people, on the face of our planet that are in investing. So once you start studying that, you're going to come across a name that we all know named Warren Buffett. So I did a lot of studying on Warren Buffett and how he invested, how he made it through all the years, and what I discovered during the economic downturns and when there were corrections and when there were recessions and things of that nature. I learned some valuable lessons from that, as well as others who had invested way before my time. And so right now people are excited, they're living the life. It's kind of like a sports player. A sports player is playing, they're making millions and they're excited. But then if they're not really doing that well and taking care of their finances, once their sports career is over, they find themselves in a bit of a crunch. They find themselves no longer being able to generate the income they were generating at that time, and they find themselves a little distraught and trying to figure out what to do because they didn't prepare while things were going great. So while things are going great right now, this is a good time to have a plan in place. If you watched any of my videos, you've noticed I've never told you or suggested to you that you should put all of your money, all of your available money that you have, you should invest it. I have made comments like, hey, invest where you may not be afraid to lose, or invest, a certain percentage of your money, and then that way you still have some cash left. Now, the reason for that is because you want to have the opportunity that when things go on sale, or if there's some opportunities, that you'll be able to invest or be able to buy. So what am I saying? So when you have a stock market crash, what happens is the stocks that are pretty much good companies that are, the stock is just damaged, but is not a damaged company. What happens is you see those prices start to lower. And when those prices start to lower, yes, you can get some really good prices on investing in certain companies. So for me, for example, like I alluded to before, when I started, investing, it was kind of around the time where the market was, was going down. So my first investments didn't necessarily do too well. I like if you watch any of my videos, I started investing with $30, and then I just kind of learned and grew from there. But one of the things that was happening during that time is things were crazy and the information wasn't as available as it was now, but people had all these different things to say. The media was playing you. The media was just doing nothing but just putting fear out. It seems like that's all they always do, put out fear. Or they just or they just oversaturate something. It's never like in the middle or good sound advice, in my opinion, in most media channels. So what happens is, you're watching the media got you thinking one thing and something else is going on behind the scenes, and vice versa. And so what happens is I started to learn about how the market would work and how you could find good investments even though the market may be looking, pretty bad or things are going down. So for example, during that time, 2008, 2009, I made an investment in Bank of America when it was $2. $2, y'all. I'm talking about $1 plus $1. It was $2 a share. Now, Bank of America was one of those companies that I was actually watching because I couldn't wait to invest in them. Now, at the time, when I first thought about investing in Bank of America, they were like $40, $50 a share. And so what happened in the economy was all this negative news, and people were worried about all the banks going bankrupt. So that's what the media was putting out there. They were just putting out all that fear. And what happens is a lot of people buy into that fear. They take their money and they run away from the market, and they just sit back waiting for somebody to tell them, hey, it's good to go in now. But see, that's the wrong approach. You can't really necessarily trust, everything the media says because they have their own agenda. That's just how it is. You just have to learn how to work in the system. And so because I already knew quite a bit much about Bank of America, because, we had a mortgage with Bank of America, we had like different accounts with Bank of America, your brokerage account, and just because they would send out their perspective, like a objective, a booklet of just things that they're working on and stuff like that. I knew Bank of America had a lot more going on than the media would allude to, like in so many other companies that they were talking about staying away from. And so when Bank of America got down to $2, I had been waiting and saving some of my money to make an investment in Bank of America and some other companies. But when Bank of America got to $2, I pulled the trigger and I invested in them. And yes, I had some friends who were also investors and people who were, trading the stock market and stuff like that, saying, man, you're crazy for putting that money in. Well, fast forward short term, Bank of America started to rise after the dust started to settle. Bank of America didn't go bankrupt. They couldn't go bankrupt because the government was forcing them to buy different companies and things like that. And so basically what happened is, you fast forward a year or two later, Bank of America was then $15 a share. You fast forward today, Bank of America is now $28 to $30 a share. It fluctuates between there right now. So what did that $2 do? It pretty much multiplied times 15, all because I had just watched the market, got some good information about something that I thought would be a good investment, and I was ready and I was prepared for it. So in preparing for something to happen like that, or preparing for anything where something that you really, really like could necessarily be cheaper and it's a good investment, you have to start to put some cash to the side if you haven't been. Now, I know everybody wants to talk about, well, what do you do when the market crashes? Let's talk about what happens before it. Start to put some cash aside now. So if you can invest $100 every single paycheck, take 50 of that, 60 of that, and you can invest that, or 80 of that. It's your choice of what you want to do, but you do want to make sure that you're also putting some type of cash to the side, because now when the market goes through things like that, or there's a recession, I'm telling you, there's some good buys. And in fact, that's when a lot of wealth is created. When people are prepared for things like that, they're able to capitalize on the opportunities in the market, not just stock market, but it could be things in real estate. For example, back during that same time, because that whole crash or that whole recession came from the real estate, that was also during the time when me and my wife purchased our first home. And listen, we got our home significantly cheaper, like $80,000 less than what it was valued at, all because of that time. So see, these are some of the things that some of the people who have really succeeded and have done very well, through our economy, these are some of the things they're doing now. They're preparing, they're putting money to the side. There's some transactions and some things, they're not doing right now. Now, do I suggest you just not put any money in the stock market right now? No, I'm not really a fan of that, because if you really want to invest in something, invest in it. I mean, if that's really how you feel, because trying to predict like when the market is going to, go down and all this other stuff. I am not a fan of predicting when the market is going to have a crash or it's going to go down. I'm a fan of being prepared for when it does. All the while still being able to do things that you need to do, like make investments and of that nature. And some investments, right now might not be a good time, but that just depends on the situation. And you have to value, and have to, decide on that, for yourself. But just to stay away totally from, investing anything. And I ain't because I've seen some videos of people saying, hey, I ain't put no money in the stock market right now. Well, God bless if that's your choice. I'm not necessarily a fan of that. What I am a fan of being able to, prepare, which is taking some money, and yes, you can invest it, but then also taking some money and putting it to the side for when that same investment that you really love, like we was talking about in Bank of America, for example. Let's say if I was investing in Bank of America at $50 a share, and I really loved that company for whatever reason, and I was putting money to the side, and then it goes down. I still love that company. Now I get to get more of what I already have, at a lesser value. Now, in some cases, it may look like, oh, well, you're going to lose money. Well, see, here's the thing. I'm a millennial. I still have a lot of time left. Just like you, if you're watching this and you're a millennial, you still have a long time. But if you're like over 50 or 60 or something like that, then, investing and things like that are different because you're going to need that money sooner than I will need that money. So for me, being able to invest, and we're going back, 8-9 years ago, right? Just that investment that I made in the Bank of America. Bank of America is a dividend paying stock. I have also made money from just the dividend alone through a 8-9 year period that has been done very well. So all I'm saying is, don't try to get caught up in predicting when it's going to happen and when it's, things are going to go down. Just be prepared for when it does, so you can prepare now. Now, here's some other things you want to do just to prepare. Number one, get the fear out of your mind. Stop fearing and thinking that, because media always likes to project fear. And even some of the videos you may watch on YouTube, they love to project that fear and like that doomsday fear and things like that, when, we just can't predict those things. And if you're using some wisdom, if you're taking the precautionary steps, like I'm saying, like, don't put all of your money into the stock market, put some here, and then you have some set aside. Those things help you to be prepared. So it's nothing to fear. And something I like to say, if you learn about what you are fearing, then all of a sudden you don't fear it as much. So whatever it is you kind of have a fear about, just learn more about it and you'll see that fear start to go away. Another thing you can do, if you are working and you have a 401k, or even if you're not working and you have like, a IRA or a self-employed IRA or any type of IRA you have, now is a good time to, just take a look at, where your money may be going if you have different funds in it. Most people who have a 401k, they just know they have a 401k. They have no idea where the money is going. They have no idea of the funds that the 401k has. They have no idea where their money is within those funds. And, a lot of those funds are just made up of a bunch of stocks. So now's a good time to, log into your account, your 401k, get access to your 401k account and start to look at, allocating some of those funds, meaning that start to change up, maybe, how much money is going into a particular fund, or how much money is going into like maybe, a bond or something like that. But just start to take a good close look at your 401k. Now, does that mean like put less money in the 401k? No, that doesn't mean that. Now, yes, I am someone who's about business, who's about investing and things like that. But if you work a job and they have a 401k and you can get that match that they're giving and it's a good match, listen, have at it. That's still building towards your future. But what you want to do is you want to just take a look at your 401k and see, here's what happens. So when the market goes down, right? So just like we're talking about stocks, and this is what happened during the time where I experienced that recession. I've only experienced one recession, like far as being someone that's actively in the market. So that's the example that I'm able to use. So, but when the market started going down back then, you still had people putting the same amount of money into their 401ks. And it was all on the news about, oh my God, people losing their retirement. Well, it wasn't for everybody. That was for people who were like over the age of 55 or so. They had to worry about that because, they would need that money sooner than later. And so for you that's under that age and you still have some time left, then what you want to do is you don't necessarily want to just take money out of your 401k, because your money is going into your 401k. All right. And those stocks and things, yeah, you see your portfolio go down because the stock prices are getting cheaper, and some of those funds are, they're getting cheaper as well, but you still have the same amount of money in it. So the amount of money you're putting into now only buys more of those stocks, buys more of those funds. So then when things turn around, you see your money go up. That's what happened back in 2009, 2010, 11, 12. People 401ks were like skyrocketing and they didn't even know why. And that's the reason why. So that's something to also consider and to take a look at and to be more watchful of. Now, for those that don't care too much about 401k or whatnot, well, that information isn't for you. That's for those that are using their 401k. Another thing is start to watch the market, because when things start to go down, the overall market, the overall economy, you start to see some different opportunities. Like I talked about, me and my wife being able to get our house during that time. We saved a lot of money by doing that and getting the house during that time versus when things were high. Like right now, the housing market in our area, like things are like, they're climbing like almost every single day. And so being able to, be able to get our home at the price that we were able to get it, in an area that is considerably, pricey, it was definitely a blessing. So pay attention to the market and pay attention to opportunities that are coming available when something like that happens. Another thing to be mindful of are the trends. There are some trends and some occupations. There are some industries that do very well during a recession, and then there's some industries that don't do very well when things are going down. If you're in an industry that's not doing very well when things go down, then you need to also make sure you prepare. If it's your job or something like that, make sure that you're have some other way of making money. I am a big advocate for having a side hustle or having some type of side business, even when you're working. So you want to make sure you have something in place and have a plan in place. It's not saying that you will be affected, but this is just in case. See, during that same time of that economic downturn, recession, whatever they want to call it, basically what I was involved in was I was actually laid off from my job. I was laid off. I used to work as an engineer. I worked for a structural engineering consulting firm, and our industry literally started to get crushed because we had a lot of contracts and things that were tied up in construction and things like that. Pretty much like everything had to do with construction because we were structural engineers. So when that started to happen, you start to hear things like, oh, well, we haven't laid people off in a while. Oh, we reserve the right to decrease the match of the 401k. Oh, this is how much you actually are costing the company above your salary and above your pay. All the fancy and all the different strategies that start to come out when to say, hey, listen, we're about to start, cutting some people off. And me, I just happen to be one of those people that was affected by that. So pay attention to your industry that you're in and, make sure that you are secure just in case. And I mean, you really should do that anyway and not, just put, all your weight in one area anyway. But just make sure that you have another way of making money. Make sure that you have another avenue of generating income, starting a side business, side hustle, gain a new skill or something like that, just to kind of be prepared, just in case something goes wrong. Rather, it has to do with the economy or just in general for your life. It's definitely a good rule of thumb to have. Another thing you can also consider is is, if you have a vehicle, for example, or you have something that you're making payments on, that, you've just been making the payments, but if you have the capabilities to make, maybe larger payments or to pay that loan off, like say for your vehicle and things like that, start to consider that. Because if you were someone that, your industry was in jeopardy and you lost your job, then you lose your income and you still have, something like a car loan that's still, got to be paid every single month. You don't want to have that pressure along with the pressure of trying to, take care of your home. And then you got to worry about medical expenses and things like that. Then you also want to make sure you consider, maybe starting to focus on, getting your debt down just a little bit, especially if, your industry can possibly be affected. Now, it's nothing to fear about. It's just a heads up of some things that you just might want to think about in case we do go through some type of economic, correction or some type of recession or something like that. But all in all, guys, don't fear and just prepare. Learn how you can be prepared. There's some other videos out here that are really good, that's on YouTube, that are really got some really good information on helping you to prepare for stuff like that too. Take your time, study, learn, and like I said, do not fear. But hope this has been helpful, guys. Thanks for sticking around. And as always, I'll see you guys in the next video.